Hi guys, this is Ray from Next Forex Trade. Today is the Tuesday the 23rd of July 2019, and yeah, what we'll do, I think we'll kick off by having a look at yesterday's trade setup and just see how that's going. So just quick overview of what we're seeing here. So here we've got the AUD daily, 4 hourly, 1 hour, 15-minute, 5-minute. My approach is based on time frame correlation, so I'm looking for all of the time frames to agree as much as possible, and I use the higher time frames for to determine whether to trade, and then the lower time frames to help with the timing of the trade. So in this one we can see based on the daily, this was my entry, so the price is pretty much near where I entered yesterday. The stop loss is this red line here, take profit is this red line here. Now we can see, if we look at the hourly, this might make it a bit clearer than the other time frames. The price did, from yesterday, my entry, I'm guessing, was around about here on this candle here, and the price had moved away, and it pulled back, and it's moving down again now. But it had gone into profit, and then it kind of gone back to break even within the last hour, and there's still absolutely no reason to exit this trade. The price action is still forming as I'd like, and it hasn't broken structure. And this is one of the ways that you can think of a trade. If you're in it and you think to yourself, right, if I hadn't been in this already, would I still trade this? And if the answer is yes, then it's you got to stay in it. If the answer is no, then you need to think about what your exit plan was to start with, whether you assess this correctly. Sometimes the price, if you're trading based on price action, the story can change, and it can be worth taking your position out if the story does change. But you just need to be clear on what your variables are before taking the position. As I would have explained in yesterday's video, for me this price action is pretty good, and the story would change if it had taken out this high or this high, because then in a downtrend we're anticipating there'd be lower lows and lower highs. If one of these highs were taken out, it would mean that the price would be showing higher highs, which isn't what isn't the characteristics of a downtrend. So in that instance, I would consider perhaps moving up my stop loss to a break even, or managing it some other way. But that hasn't happened as of yet. But I am prepared should that occur. But so far, this trade on the AUD I'm happy to continue keeping this trade on and to see how it plays out. And I'll update you as and when necessary. So this is the main one that I've got at the moment. The other one that I looked at earlier, just before coming online, what was that? It was GBP JPY. So I'll just break down what I'm seeing on that. Okay, so GBP JPY. This is our daily. I've got my standard deviation channel around the most recent move. We can see that the price isn't really I prefer when it's kind of hitting the upper standard deviation channel to show signs of it being overbought. It isn't doing that at the moment. It's kind of hugging the average of the standard deviation, which is fine. There's still context to this because we're seeing the price make lower lows here and lower highs as well, these levels. We had yesterday's candle, which was quite toppy and interact with previous support as well. I'm just going to get a horizontal out and put this across here. So this was our candle yesterday, quite a toppy candle, as well as the previous day on Friday as well, and it had found resistance against these previous support levels. Just see how far that goes back. Okay, no, but there's clear evidence that there is some resistance there, and this candle that we saw yesterday is viably a higher low a lower high in this downward movement. So just eyeballing this, what I would be thinking is if I were to take a position on this, stop loss above this level. So yesterday's high makes sense with a 1-to-1. You can see I've put the alerts in here to make it easier to see on various time frames. 1-to-1 around this level. So let's just have a look at the lower time frames to see how that could help in terms of timing and entry. We can see we've got some nice, more clearer downtrend type of action here, with the lows and highs more prominent on the 4-hourly. And obviously if we put the standard deviation channel around it, it's a similar story to what we're seeing on the daily, kind of hugging the average there. And it looks like it's retraced in this move here, potentially looking to move in a downward kind of extension move next. Of course, I'm just preempting that. It could just, turn around and move upwards and start making higher highs, but I'm just trying to piece together what I can see in the price action. So looking at the hourly, I do still have the sniffle, so I apologize. So in the hourly, we can see, firstly, obviously, we've got that downward movement, just more spaced out, if you like, from that we were seeing on the higher time frames, the 4-hourly and the daily. These highs getting lower and these lows getting lower as well. At the moment, it has interacted with this. It's very choppy because it's kind of sideways, but not sideways at the same time. So there's this area of support here that it's had trouble getting through, which was previous resistance as well. So this is kind of a key level for it to break through, at least on the lower time frames. And this, you can see this level here, where this red arrow is. This is the high, yesterday's high that I was talking about. So the price, the way I'm looking to structure this is having a stop loss above this level, this lower high here, in terms of a stop loss. Let me just have a look at how this. So on the 15-minute, which is this one here, what I've done is put a standard deviation channel around the most recent price, and I'm looking for signs of reversal at in the next candle, actually, and the price to move past the low of that candle. So that's about 3 minutes away. So we do have a little few minutes. It's 3 minutes to 11 at the moment. So I'm going to wait for this candle to close, and I'm going to wait for the price to move past that low. And if that happens, then I will consider taking a short on this. But certainly with reversal candles, it is definitely worth. You heard me say wait for it to move past the low of it. The reason I want it to move past the low is because if we have some kind of a reversal candle and we just aggressively trade on that candle, the price hasn't yet shown us its intentions. we want it to be showing showing signs of bearishness, and to prove that bearishness as well. So just seeing a candle form on its own for me isn't enough. It needs to show it and move past the low, so that again, all things are kind of aligned and moving in the direction that we want. So I'm going to wait and see on this one. And while that's happening, what I'll do is I'll go through some of the other charts as well. In fact, so I'm going to set up an alert for this, a sound alert. In fact, I'm going to figure out what the position size would be as well. So let's assume that I enter here. I'm going to go for a stop loss above this level. Just give it a bit of extra because of the spread as well. The spread, and so I'm going to call that about 56. What I like to do as well is just check on the swap. So if this does end up being something that has to be carried overnight, I just want to be aware of how much that could cost. So I don't know if you can see that. I don't think this comes up because of the way I've set up my recording software. But what I've done is gone to the currency pair. So press Control M on my keyboard to bring up Market Watch. Right clicked and then gone to specification. And then if you scroll down, you'll see swap short and swap long. So the swap short on this, I would be incurring a cost of 6.1 on the swap per lot. So it would cost me to hold this overnight, but it may not be one that needs to be held overnight. Okay, so this has gone in a good enough position to consider my short. I'm going to go with a stop loss of about 57. So I'm just bringing out my calculator here. I'm going to risk 1% on this. So 100 divided by what did I say, 57, so 570 times, and I need to get the current. Okay, it crosses with pounds. My account is in pounds as well, GBP pounds. So there are a few extra steps I need to take to figure out the lot size. $2.35. So what I've done there, you can see I've now got the position in, and this is at 1%. So basically this stop loss here means that I'm going to lose £100 if the price comes up to these levels here. And I'm just going to cancel that alert because it's going to get annoying. And I'm also going to move this down to, and in fact, so what I'm doing, if you look at the left hand side here, I'm going to drag, this is my entry, and what I'm doing is just dragging it down, and you can see that the this number here is the pounds, in pounds, what the profit will be. Okay, so I'm happy with that setup for now. So the way I would manage this is, should the price start to kind of attack these highs here and test these highs in this price action, I'm going to move this alert down, and you can set your alerts up on whatever you like. Trading View, if you run MetaTrader throughout the day as well, you could just use the Trading View, MetaTrader alerts. But for me, the cause for concern, if you like, is if this price structure here, where these lower highs are occurring, if the price comes up and tests these levels here, then I'd need to think about moving my take profit to break even, because it's not doing what I would assume the price would do, which is make lower lows and lower highs. And I've mentioned this in other videos. You could quite viably just take the trade and have your stop loss above this level and go for a 1-to-1, and that way the price wouldn't need to move as far down. But I just like to have more ways of protecting my capital, and also a stop loss that makes sense on multiple time frames. My stop loss here means that it's above the resistance that we were seeing on yesterday's candle, right? So above here, which is also above this resistance. So it makes sense in terms of getting out of the danger zone on the daily, the 4-hourly, the hourly, multiple time frames. If I were to just have a stop loss above that most recent lower high, that would still be viably somewhere where the price could easily move to on any of these time frames, but still be okay in terms of the grand scheme of things. It could still be, you know, it wouldn't have been wrong yet on any time, on any of the higher time frames, just on the lower time frame. So this stop loss for me makes sense. the reward to risk is good enough as well. So I will just leave this in and update you as in the next video, or perhaps later on today if that's viable. So okay, so we got 2 trades in. I would certainly suggest not having any more than that. It just makes it more difficult to monitor, and you don't want to make things as I talked about yesterday, you don't want to risk doing currencies that are correlated or negatively correlated, because it just makes things a lot harder for you, and it also means that it's just harder to monitor stuff. You don't want to be rushing around. It's not like you see in the movies where you've got the massive open outcry, buy, sell, it's all kind of high risk, high energy like that. It doesn't need to be like that. And as a retail trader, really, you can't compete at that level. Some brokers may have you think that you can, but you can't. You've got to choose an approach that is that you can win at. And trading this way, where you're not having, you can see my entries aren't pinpoint entries. I always say, around about here, around about there, because to give a specific level, even from broker to broker, your prices are going to be different with Forex. It's just the way that a decentralized market works. It's not a central exchange that the prices are going through. So knowing these things and trading in a way that isn't pip perfect entry or exit, it's more getting a direction right and trading based on principles rather than specific levels, you've got a much bigger chance of coming out on top. So what I've done here, I've got a special template set up for when I've taken positions, which basically summarizes everything that we saw on the individual tabs, but on one page, and it just allows me to monitor more than one currency at the same time. So here I've got these 4 windows for the AUD CHF and these 4 windows for the GBP JPY. So I may just check in on these throughout the day. Starting out as well, if you're new to trading, what I would suggest is don't think about managing the trade in the way that I've discussed. Just have your take profit, have your take profit, have your stop loss, and just get used to the trade playing out that way. Just develop discipline to see the trade hit take profit, hit stop loss, regardless of what you do. Just do your planning ahead of time and have it play that way, and then consider once you've seen some success, or not even, it doesn't have to be success, it's just you trading to that plan over a period of trades, so 20, 30, 50 trades, whatever it takes, that you stuck to that plan, even if you've lost overall on more than you've won, doesn't matter. It's just you sticking to a plan, and then consider bringing the additional management tools I talk about here to manage trades into profit or to manage losses. So let me just check how we're doing on time. Okay. But I'll quickly go over some of the options here, see if there's anything else that majorly pops out. I'll just say a quick yes or no. So here, looking at the daily, no, that's a good position, but it's not showing any signs of bearishness. Again, that goes into what I was saying in terms of seeing some kinds of reversal and the price moving past the low as well. So that's not ready. ADCHF we've seen already. This is okay, but need to see some signs of bearishness here. So the daily is looking good. We've got reversal candles here showing resistance, but the 4-hourly and lower time frames aren't showing signs of bearishness yet. So I would leave that. I'd be bearish on this, but there's just not signs of bearish. I do want to see bearishness on the 4-hourly. So for it to break definitively this standard deviation channel that we're seeing here, it's going up. So I do want to see it break down and pull back. So given that these are 4-hourly bars, that's not going to be today. Two sideways. This is looking good in terms of it being an uptrend with higher lows and higher highs. This is interacted with standard deviation channel, giving signs that it is oversold. But what we need is to see better signs of bullishness. This is still showing that it could potentially move down because it's taking out the low of yesterday's candle. And also in terms of this standard deviation on the 4-hourly, this is still bullish, and it's still within the confines of this standard deviation channel, which is good because we're bullish, but we just want to see more signs of bullishness. So it taking out, for example, the reason I put in this alert here, probably mentioned it yesterday, is it would be better if it were to take out this previous lower high, because that would be it breaking price structure, starting to show higher highs and potentially higher lows as well. So this candle will be interesting to see how this forms today, and potentially there could be position for tomorrow on this, but not today. No, wouldn't trade that. No. Kind of like the trader we're in on the JPP JPY, but not as good as an entry single. I'd need to see this close tomorrow, so close today, and then look at it again tomorrow. So for today, no, too oversold, definitely bearish on, but it's too expensive to short. No. And each time I'm just looking at the daily here. Yeah, good for a fade trade, so going counter trend. But I would have mentioned that yesterday. I don't usually go for those types of trades. No, this is down, but we can see this movement looks like it's going into a retrace. So no, too flat. No. Yeah, a lot of the GBP pairs are like this. They're kind of at the mean, at the average, and they've come back up and found resistance. As if they're, in a retrace looking to go into the extension, but this, no. Possibly something to fade if I were to do that, but no. Already in this one. No. No. And really a lot of the time it's just the best of the pick. So if you see two that are similar, just pick the one with the best setup and go with that. Don't go into both of them, because you're effectively likely to double your risk if they're correlated. No. 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 And there's Bitcoin in here as well. Don't really trade Bitcoin, but some people might. It's just at the moment there's just a little bit of incongruence, if you like, with how the time frames are working together. So the daily for me is saying up, higher highs and higher lows. The 4-hourly here is saying down with lower highs and lower lows. And the hourly is saying up. So I want to just see a bit more congruence between the 4-hourly and the daily, so for it to break these kind of highs here, this resistance here, and then pull back would be would be better. Oh, hang on. No, sorry. These, I knew that looked weird. These aren't Bitcoin. These lower time frames didn't correlate properly. So let's just have a look. Yeah, that looks better. So these highs here, we can see on hourly or the 4 hourly, they'll be the same. So for the price to break through and pull back would give us a better entry based on what we're seeing on the daily. So yeah, that's it for today. There's 2 trades on that I'll come back and give an update on tomorrow or later on if needs be. And yeah, that's it for today. I will see you tomorrow. Excuse me. If you do want any coaching one-to-one, feel free to click on the link below for nextforextrade.com. I offer one-to-one coaching on Forex over Skype or Zoom, and I can really help get your trading game on track or back on track if you've had any trouble. But yeah, I will see you guys tomorrow. Thanks for listening, and I will see you soon. Bye.